Speaking of mid-caps, let's get a quick conversation going with Shujaul Rehman, President and COO of Garware-Wall ropes, who's on the phone line. Mr. Rehman, thanks for taking this call. It seems to have been a pretty good quarter for you, almost on all counts. Your top line is up 20%, EBITDA has grown by 34%, there's margin expansion as well. What's driven the performance this time?
Good afternoon, thanks for calling. I think it's been a continuous effort that we have put in the last few quarters on driving customized applications across sectors and across geographies. We have a very good mix of domestic and export sale, almost 50-50. So we are doing well all across. So that's helped us. And we all launched some new products which are doing well for us.
All right, Mr. Rehman, raw material we understand is a crude derivative. You haven't seen a lot of benefits flow through yet. Is that something which is in the offing for the second half of the year or maybe Q2 itself?
The raw material cost has been fluctuating. So we saw an increase towards May, June, and then it's come down. And it's all linked to global prices of crude. So in the Q1 results, we have some benefit of RM drop. Probably we'll get some more benefit even if it continues to drop. But I think we are slightly more insulated to RM prices because we have value-added products, and where we have value addition which is there in the product. So we are not very closely linked to commodity prices. But obviously there is a positive and a negative downside if it increases or decreases.
Can you give us some sense of how your individual businesses are performing, Mr. Rehman? Between the sports segment and the agri segment, where do you expect bulk of the growth to come from for the rest of this year?
We feel that growth will come in agri and aquaculture. Agri will be in India and aquaculture will be globally. So we are a very strong player in terms of aquaculture globally, and we are driving into new geographies like Chile and other markets in Mediterranean, so where we'll see some growth happening. And in agri in India, it will be one of the growth engines for us.
Your finance costs came down quite sharply, this time around, and the debt levels are down from the numbers that I have, are down to around 31 to 32 crore rupees. That's a sharp drop compared to where they were a couple of quarters ago. Are those kind of debt levels sustainable, or will you have to undertake more capex and then therefore perhaps raise more debt from the market?
No, I don't think we will be raising any more debts. We have sufficient cash on the balance sheet to fund our capex plans, which we have for this year and next year.
How much is that cash, if you could just tell us?
I think around, how much is the cash? Around 250 crores is there on the balance sheet. So I don't think we need any market, debt.
All right, Mr. Rehman, thanks very much for speaking with us.